story this morning. Indeed, he's been reading the headline in the FT on that very issue. Pete McGuire from McGuire, Chief Market Strategist and Economist. Pete, welcome to you. That stock, well, the market on any score would want certainty. They're not alone, are they? As the FT makes clear, there's kind of a bit of a sea change happening across the leadership space.
Absolutely.
In mining at the moment.
Well, when you look at it, good morning, Brooke, and good morning, Carson. I mean, you know, you're talking about Anglo-America. You're also where as Cloppers is concerned and Xstrata. So, you know, changing of the helm isn't unusual, and the stewardship of these companies, but mindful that we saw last year BHP touch $49 and now it's trading in that mid-$34 to nearly $35 range. So it hasn't been a great time for the stock. And I'm sure that, you know, the tenure as far as stewardship really, you know, 4 to 5 years is about right, and let's try and find someone else, and that's where Jack Nass's come into play and looking across that sort of mindset.
There's a good link here into the US election because Carson and I, you know, when the iron ore price really dropped off, and we were speaking to you at that point as well, BHP's petroleum division was actually kind of the backbone at that point when iron ore prices were at their lowest. So there's an important link here in terms of the outlook for the oil price and how BHP might fare, say, under a Romney win or under an Obama win.
Well, and of course after, well, and when we roll that across to what happened as far as Sandy, as far as terminals, refineries and shutdowns, so you've seen a fairly strong rally overnight. As far as crude, it was up the best part of 3%. You may see a little bit further uptick there. I wouldn't be surprised, but you'll see a greater divergence between Brent and WTI from January forward.
Queues at the Bowser on election eve doesn't necessarily spell glad tidings for the incumbent.
No, it certainly doesn't.
What's your view on the real net effect for the consumer on all of this? Refinery shutdowns, gasoline price spikes?
I think you're running at about I haven't kept a close eye on gasoline prices in the US for the last 24 hours, but I think they were $3.40-ish. They'll probably edge higher, and you've got an unseasonably cold weather snap in that whole northeast region, so you'll see more demand for heating oil, and that wouldn't be surprised to, you know, roll that across to gasoline and other distillates. So with refinery shutdowns and getting over Sandy, yeah, we're probably going to see higher prices.
I saw a graphic on Fox Business this morning. They were looking at how commodity prices had fared during Obama's term, 4 years. The oil price up more than 100%.
Yeah.
Is that in any way a function of policy? Yeah, well, that's right. Of course. Yeah, I mean, it's been kind of risk on, which which goes against, you know, traditional thinking of Republicans being more friendly for markets. But 100% gain in the oil price. Is any of that to do with policies of Obama? As we try and gauge the outlook in terms of his view towards, you know, big oil and what he might do in the next 4 years?
Well, remembering one thing, Brooke, you know, unfortunately for Obama, it peaked at $147 in early July, and it crashed to $33 or $34 within 13 weeks, just before he started his tenure. So back at $30 odd, it's not unusual to see that high price spike, and we saw WTI approaching that $100 level. Yeah, I mean, that's just the way of the energy markets. I really, you know, it's a hard one to pinpoint and say, you know, he's responsible, but
you know, because people are starting to come out and say, okay, if Obama gets in, oil stocks will do well, or, you know, we're discussing this in the next half hour, of course, but that's the debate, isn't it?
Well, it is. I mean, you know, hopefully, of course, it comes down to his policies and, you know, the sanctions still biting in Iran. What happens there as far as the Middle East? There are many different avenues that can be looked down to see, you know, what gives us the, I suppose, the forecast moving forward. But the real issue at the moment is what's going on, who's going to win, and it's neck and neck as far as the pollsters are saying.
How do you play gold over the next 72 hours? Because the call has been the US dollar will spike irrespective. Net, that'll be a downward signal, would it not? But then are you buying on the dips or what?
Well, it was up the best part of, you know, $31, $32 overnight. I wouldn't be surprised to see a short-term US dollar, strengthening. Sure, what you're saying, maybe sell off gold, but dependent upon your stop losses and dependent upon the instrument that you're trading. But Obama wins, I think you're going to see higher gold prices leading into January. If Romney wins, I think they'll stay around these sort of levels, if not go off a little bit.
So you're eyeing QE4 inevitably?
With a continuance, absolutely. Just a continuance.
Which is something we didn't get here domestically. So with your McGuire hat on finally, where does that leave the housing market?
First off, the RBA rate, I was a little bit surprised yesterday. Like a lot of economists, we would have thought that we would have seen a cut. Housing market here, I think, will just go through a nice general uptick as far as the Sydney market's concerned. And I'm sure that 13 won't be a bad year.
Hold you to it.
Thank you.
All right, fingers
Thank
crossed.
you from
See you, Carson.
NG
Okay,
Farah.
this week.
Peter McGuire with us in
Okay.
studio.